Your favorite tech brands fight for headlines, while the real power brokers remain in the shadows. At the heart of every device you own, every circuit that powers your digital life, lies the influence of an Asian dynasty worth $30 billion. The Li family doesn't play the Silicon Valley game, they own the board itself, controlling supply chains that make today's tech titans possible. This isn't a story of flashy innovation or disruptive startups. It's a tale of hidden empire builders who understood that true power doesn't need a spotlight. It just needs to be everywhere, invisible but essential, flowing through the silicon veins of our connected world. In 2024, Li Ka-shing commands a fortune of $36.2 billion, built through a complex web of investments spanning property, infrastructure, and cutting-edge technology. From his Hong Kong base, the Li Empire operates through two main vehicles, CK Hutchison Holdings and CK Asset Holdings, representing one of Asia's most diversified business portfolios. Through Horizons Ventures, his technology investment arm, Li has demonstrated remarkable foresight in backing transformative companies. The fund made early investments in Facebook and Spotify before they became global phenomena. His technology portfolio extends into artificial intelligence, biotechnology, and alternative proteins, including investments in companies like Impossible Foods and Perfect Day. CK Asset Holdings has amassed one of Asia's most substantial property portfolios, with significant holdings across Hong Kong, Singapore, and mainland China. The company's developments range from luxury commercial properties in Hong Kong's Central District to large-scale residential complexes across multiple Asian markets. The Li Empire's infrastructure investments span three core sectors: ports, retail, and telecommunications. Their port operations form a crucial link in global trade networks, while their retail and telecommunications businesses serve markets across Asia and Europe. Despite this vast scale of operations, Li maintains a notably low profile, earning him the nickname Superman in Hong Kong business circles. Beyond traditional infrastructure, Li has positioned his empire at the intersection of old and new economies. His investments increasingly focus on emerging technologies that promise to reshape global industries. From synthetic biology to quantum computing, the Li family's investment strategy targets innovations that could transform how we live and work. The scale of Li's influence reflects a remarkable journey from modest beginnings. His empire touches multiple sectors of the global economy, from traditional port operations to cutting-edge technology startups. This diversification strategy has created a business ecosystem that bridges traditional infrastructure with future technologies. But to understand how a young refugee built this formidable business empire, we must return to war-torn China, where Li Ka-shing's remarkable journey began amid circumstances that would forge his resilient business philosophy. The Li story begins in Chaozhou, Guangdong Province, a region long known for producing China's most successful merchants. Li Ka-shing was born on the 29th of July, 1928, into a family of educators where his father worked as a teacher. This relatively comfortable life was shattered in 1940 when the Japanese invasion of China forced the family to flee to Hong Kong. The move marked the beginning of severe hardship. Their middle-class existence disappeared, replaced by the harsh realities of refugee life in crowded Hong Kong. At just 12 years old, Li began working to support his family, facing adult responsibilities while still a child. The situation worsened dramatically when Li's father developed tuberculosis, eventually succumbing to the disease and leaving the family destitute. The 1940s proved formative for young Li. He worked as a salesman in a plastics trading company, developing the business acumen that would later serve him well. The experience exposed him to every aspect of the industry, from manufacturing processes to supply chain logistics. These years laid the foundation for his understanding of market dynamics and business operations. By watching and learning from successful merchants and traders in Hong Kong, Li gained invaluable insights into business fundamentals. He studied market trends, observed customer preferences, and learned the intricacies of international trade. This practical education would prove more valuable than any formal schooling. In 1950, leveraging his experience and understanding of the plastics industry, Li started his own company. The venture capitalized on Hong Kong's growing role as a manufacturing hub, particularly as Western demand for plastic products increased in the post-war period. His timing proved perfect, as Hong Kong's manufacturing sector was entering a period of rapid expansion. The success of his plastics manufacturing business reflected Li's emerging business philosophy. Identify growing markets, maintain tight cost control, and focus on export opportunities. His operation grew steadily through the 1950s and 1960s, building a reputation for reliability in international trade. As his business expanded, Li kept a keen eye on broader opportunities in Hong Kong's rapidly developing economy. He observed the territory's transformation from a refugee haven into a global trading hub. The dramatic changes in Hong Kong's economy during the 1960s created unprecedented opportunities, particularly in real estate. Throughout this period, Li developed his characteristic approach to business: careful observation of market trends, strategic timing of investments, and a focus on fundamental value. These principles would serve him well as Hong Kong entered a period of unprecedented growth and change. The next phase of Li's career would demonstrate his ability to seize opportunities during times of crisis, transforming him from a successful manufacturer into one of Asia's most influential business figures. During Hong Kong's violent riots of 1967, as property values plummeted and many investors fled, Li Ka-shing saw opportunity. Counter to prevailing wisdom, he began systematically acquiring properties throughout Hong Kong at deeply discounted prices. This bold move would transform him from a successful manufacturer into a real estate mogul. The next major turning point came in 1972, when Li listed Chung Kong Holdings on the Hong Kong Stock Exchange. The timing proved impeccable. Hong Kong was entering a period of unprecedented growth, and the public listing gave Li access to the capital needed to expand rapidly. Within years, Chung Kong became one of Hong Kong's largest property developers. Li's empire expanded significantly in 1979 through a historic deal with HSBC. Chung Kong Holdings acquired a 23% stake in Hutchison for 639 million Hong Kong dollars, marking the first time a Chinese businessman had gained significant control of one of Hong Kong's prestigious British-owned trading houses. The acquisition provided Li with substantial port operations and retail businesses. The late 1970s saw Li begin his international expansion, starting with significant investments in Canada. This early move toward geographical diversification demonstrated Li's strategic approach to risk management, spreading his business interests across different markets and regions well before such international expansion became common among Asian businesses. Through the 1980s and 1990s, Li continued building his telecommunications empire through Hutchison. The company developed extensive telecommunications operations across Europe and Asia. The most profitable venture proved to be Orange, which Hutchison sold to Mannesmann, generating a $15 billion profit in one of the largest telecommunications deals of the era. Simultaneously, Li began restructuring his empire for the challenges ahead. He separated his businesses into clearly defined units: Chung Kong for property development, Hutchison for ports and telecommunications, and various other entities for specific sectors. This structure provided clarity for investors while maintaining family control. By the turn of the millennium, Li had transformed his business from a local Hong Kong operation into a global conglomerate. His empire now spanned ports, telecommunications, retail, energy, and property across multiple continents. Yet even as his businesses grew more complex, Li maintained his characteristic low profile and focus on fundamental value. This period also saw Li begin grooming his elder son, Victor, to take over the empire. The succession planning demonstrated the same methodical approach Li applied to business decisions, ensuring continuity while adapting to changing times. In 1999, ahead of the dot-com boom, Li Ka-shing established Horizons Ventures, which would become one of Asia's most influential technology investors. His personal investment strategy demonstrated even earlier foresight. In 2007, he invested $120 million in Facebook through his Li Ka-shing Foundation, long before social media's dominance was assured. The transformation of his traditional business empire came in 2015 through a major reorganization. Chung Kong Holdings took over Hutchison in a complex restructuring that created two distinct entities: CK Hutchison Holdings, which would control the global operations in telecommunications, retail, infrastructure and energy, and Chung Kong Property, focused on real estate development. Under this new structure, the Li Empire maintained its characteristic balance of stability and innovation. CK Hutchison Holdings continued operating the family's traditional infrastructure and retail businesses across multiple continents, providing steady cash flow and stable returns. Meanwhile, through Horizons Ventures, the family expanded its technology investments, backing companies like Spotify and Impossible Foods, the plant-based meat company. The evolution of the Li business empire reflected broader changes in global commerce. While maintaining their traditional strengths in infrastructure, ports, and real estate, they increasingly focused on identifying and investing in transformative technologies. This dual approach, operating established businesses while investing in potential disruptors, became a hallmark of their strategy. Victor Li gradually assumed greater responsibilities within the family business, working alongside his father in both the traditional and technology-focused aspects of the empire. The transition culminated in 2018, when Li Ka-shing retired as chairman of CK Hutchison Holdings, marking a generational shift in one of Asia's most powerful business families. The succession represented more than just a change in leadership. It symbolized the evolution of a traditional Hong Kong conglomerate into a global business empire equipped for the digital age. Under Victor's leadership, the group maintained its dual focus on infrastructure and innovation, continuing the careful balance his father had established. Throughout this transition period, the Li Empire demonstrated its ability to adapt to changing market conditions while maintaining its core strengths. The family's experience in traditional businesses informed their technology investments, while their exposure to innovative startups helped modernize their established operations. This transformation from a traditional conglomerate to a technology-savvy global enterprise raised questions about the future direction of the Li Empire in an increasingly complex business environment. In 2024, at 96, Li Ka-shing's influence extends far beyond his $37.3 billion fortune. While his elder son Victor chairs CK Hutchison Holdings and CK Asset Holdings, Li remains actively involved as a senior advisor, maintaining the careful balance between tradition and innovation that has characterized the empire's success. CK Hutchison Holdings, despite facing market challenges since 2018, continues operating essential infrastructure across multiple continents. Their technology investments through Horizons Ventures have proven remarkably prescient, with successful early stakes in companies like Facebook, Spotify, and Zoom, positioning them at the forefront of digital transformation. The Li approach to business provides valuable lessons for other Asian family empires navigating technological disruption. Their strategy of maintaining traditional infrastructure while investing in revolutionary technologies demonstrates how established businesses can adapt to rapid change. This balanced approach helps preserve wealth while creating opportunities for future growth. The transition to the next generation reflects the family's methodical approach to business. Victor Li's chairmanship, supported by his father's continued guidance, ensures continuity while allowing for adaptation to changing market conditions. This carefully managed succession helps maintain the disciplined investment approach that built the family fortune. Through the Li Ka-shing Foundation, the family has invested over 30 billion Hong Kong dollars, approximately 3.8 billion US dollars, in education, healthcare, and other philanthropic initiatives. This commitment to social responsibility extends their influence beyond pure business success, creating a model for wealthy Asian families seeking to balance profit with purpose. Recent years have brought unprecedented challenges, including the global pandemic's impact on their retail and infrastructure operations. Yet the family's diversified approach and long-term perspective have helped them navigate these disruptions while maintaining their commitment to both traditional business operations and technological innovation. The family's influence on global technology investment continues growing. Their early backing of Western technology startups helped create a pathway for Asian investment in Silicon Valley, while their current focus on artificial intelligence, biotechnology, and sustainable technologies positions them for future opportunities. Looking ahead, the Li Empire faces both opportunities and challenges. While maintaining their traditional infrastructure businesses, they continue seeking investments in transformative technologies that could reshape industries. Their ability to balance continuity with innovation under the combined leadership of Victor Li and his father's advisory role suggests they're well positioned for the future. And now, we'd love to see you in the comments. How would you handle the pressure of being Victor Li, taking over a $30 billion empire while your legendary father still serves as an advisor? What would be your first major decision? Let us know your thoughts below, and thanks for joining us for another episode of Old Money Luxury. Cheers, until next time.